Adam Parker, he's the CEO and founder of Trivariate Research. He is here with me at Post 9. What do you make of this? What do you make of this turnaround today and what Josh was talking about too?
Well, I mean, look, Josh is a better market watcher than me. You know, I'm a research nerd, right? So we don't really make the 1 week calls, and so I'll defer to him. He's got a good 1 week wrap.
But you could speak to the broader issue of, you know, what Powell's likely to do this week, whether it's going to soothe or upset the market, whether it's going to be a shock, or if he tells us what we already think we know.
The reason I answered that way is because what happens over the next week is different. Ultimately, they're going to be wrong, and inflation's going to be stubborn. I know that.
You don't know that.
I do know that, because the CPI is 32% owner's equivalent rent, and rents are continue to be pressured higher. Why? Because if you think about housing as a 2x2 grid, Scott, right? High home prices, low home prices, high borrowing costs, low borrowing costs. Which quadrant are we in? High borrowing costs, high home prices. We haven't had a lot of transactions yet. And so if you're a new buyer, you're a young guy, right? You're going to say, you know what? I'm going to rent for a year or two because I got to either have the 30-year fix come down or home prices have to come down. So there's actually, I just was at a conference 2 weeks ago. Everyone is saying they're still taking almost 1% per month pricing. So the CPI is going to remain elevated for a long time. If it just started to get flat today, man, it would still take 11, 12 times raising 1% a month. Zero. It's just going to have a lot of upward pressure.
How's the Fed going to raise rates?
I don't know what these guys are going to do. They were buying billions of dollars of mortgage-backed securities.
I know you keep saying that every time you're on.
So they have no idea. So the point is they have no idea. How
what difference does it make? So they made a mistake before. Does that mean that they have no credibility for here to perpetuity?
It means they're going to keep raising rates so they control inflation much more than they have. Inflation's been stubborn in other spots besides just housing, but it has been in housing. So I think they're going to continue to be hawkish. Maybe they won't be incrementally hawkish this week. That's possible, and you could get a little relief rally. What I find hard in any medium to long-term view is what makes them more dovish is earnings come down, right? So if I think about the stock market as the price to earnings times the earnings equals the price, I have to be sustainably bullish because the PE is going to expand because they get dovish. At the same time, my view of earnings is really declining a lot.
Well, what if earnings
What
if earnings don't come down as much as you think they will?
I wrote about this week. I think I sent it to you overnight. I think what I'm starting to sort of warm to is the fact that this decline in earnings won't be short. It could maybe last into 2024. So investors who build models to predict earnings and revenues for stocks, they think out 6, 12 months and say what could be worth. If everyone I know has 2024 earnings above 2023, well, what if that's wrong? What if the consumer's been stubborn but starts to slowly unfold here over 6, 12, 18 months? Because we see a little bit of wage decline into next year as there's more firings, and we see a little bit of firing and unemployment rise next year, and the Fed starts saying, all right, it's working. I think what Josh said I agree with is it's not like they started in March and we've seen the full impact of it now. It's going to take multiple quarters. So I think that'll be interesting to see. Maybe the consumer will slow into 2023 and 24, and all of a sudden my assumptions in every one of my models that every analyst has in the street is the numbers are way too high to justify the valuation.